The most recent IPO of 2025 has captured widespread attention, marking a significant new chapter for HeartFlow. From pioneering life-saving AI innovations in healthcare to soaring more than 50% above its offering price on day one, HeartFlow is positioning itself as a standout in the AI space, much like CoreWeave or Firefly, with HeartFlow being about massive AI innovation, though operating in the highly regulated and negative sentiment sector like healthcare. But worry no more. This company is here to solve healthcare's many problems. In modern medicine, few fields carry stakes as high as cardiology. Heart disease remains the world's leading cause of death, claiming nearly 18 million lives annually, according to the World Health Organization. It's not only a human tragedy, but an economic burden. The U.S. alone spends over $230 billion each year on cardiovascular care, medications, and lost productivity. For decades, diagnosing coronary artery disease, the narrowing or blockage of heart arteries, relied on invasive procedures. The gold standard, invasive fractional flow reserve testing, requires threading a catheter into the arteries to measure blood pressure differences around blockages. Accurate? Yes. Comfortable? Far from it. The procedure also carries risks like bleeding, infection, and even heart attack. Enter HeartFlow, a Redwood City-based medtech innovator with a bold vision. What if these critical insights could be obtained without ever entering the body? Rejecting surgical robots or implants, HeartFlow's breakthrough is purely software-driven. Using advanced AI and computational fluid dynamics, the same physics behind aerospace engineering, the company analyzes standard heart CT scans to create detailed virtual maps of blood flow. The result is the world's first commercially available HTFL platform, FDA-cleared, Medicare reimbursed, and validated in dozens of peer-reviewed studies. Its diagnostic accuracy rivals invasive methods, with over 90% correlation to catheter-based FFR. With growing buzz around its IPO under the ticker HTFL, investors, clinicians, and patients are paying close attention. But HeartFlow's story goes beyond going public. It's about fundamentally redefining how we diagnose and treat one of the deadliest diseases. The platform transforms a simple, non-invasive CT scan into a 3D model of a patient's coronary arteries, allowing doctors to pinpoint blood flow restrictions, gauge blockage severity, and even predict progression, all without a single incision. HeartFlow's rise isn't just about detecting disease, it's about predicting it. At the heart of this innovation is AIQ-CPA, or Quantitative Coronary Plaque Analysis. Trained on vast libraries of medical imaging data, this tool can assess both the volume and composition of arterial plaque from a standard CT scan. No invasive probes required. Its accuracy isn't theoretical. In the REVEAL Plaque study, conducted across 15 medical centers worldwide with 237 patients, AIQ-CPA's findings showed a correlation of 0.91 for total plaque and 0.87 for non-calcified plaque when compared to high-resolution intravascular ultrasound, a gold standard invasive technique. The impact is immediate. In the DECODE trial, 67% of patients had their treatment plan adjusted after undergoing AIQ-CPA analysis, often toward earlier intervention. That's not just diagnostics, that's prevention in action. Importantly, the system is designed to work with a wide range of CT image qualities, making it accessible for hospitals far beyond elite research centers. With AIQ-CPA, HeartFlow has closed the gap between cutting-edge cardiac science and everyday clinical practice, offering doctors around the world the same level of precision once reserved for invasive, high-cost procedures. While many medtech companies pursue growth through rapid acquisitions, HeartFlow has followed a more deliberate path, focusing on strategic partnerships that emphasize innovation, clinical validation, and integration into established healthcare systems. In its early years, the company avoided the costly rush of large-scale expansion. Instead, it formed deep collaborations with leading academic institutions, such as the Cardiac Research Institute in Aalst, Belgium. This partnership was pivotal in generating the clinical evidence needed for FDA clearance of HeartFlow's HTFL platform. By grounding its launch in peer-reviewed data, HeartFlow entered the market with a foundation of scientific credibility rather than speculative hype. As artificial intelligence began to transform healthcare between 2019 and 2021, many competitors turned to acquisitions to accelerate development, absorbing smaller AI firms or clinical startups. HeartFlow chose to invest internally instead, recruiting specialists in computational modeling, fluid dynamics, and data science. This commitment to in-house development led to the creation of AIQ-CPA, an advanced plaque analysis platform. Retaining full control over intellectual property ensured that HeartFlow dictated its own roadmap, quality standards, and long-term vision. Bringing AIQ-CPA to market required more than engineering excellence. The company launched extensive international trials, including REVEAL Plaque and DECODE, to prove its clinical value in real-world settings. In REVEAL Plaque, a blinded study involving 258 patients across multiple countries, AI plaque analysis achieved 95% agreement with invasive intravascular ultrasound in quantifying both total and calcified plaque volumes. DECODE demonstrated that after reviewing AI-derived plaque metrics, physicians altered treatment plans in roughly two-thirds of cases, showing a measurable impact on personalized patient care. By 2022, HeartFlow had refined its global expansion strategy. Rather than acquiring hospitals or imaging companies, which can be costly and operationally disruptive, it focused on embedding its technology directly into existing healthcare ecosystems. In Germany, partnerships with high-volume cardiac centers allowed HTFL results to integrate seamlessly into physician workflows. In Canada, collaboration with provincial health authorities facilitated multi-site adoption, bringing advanced coronary diagnostics to patients well beyond major cities. In South Korea, cooperation with local imaging providers ensured compatibility with national protocols, enabling broad-scale implementation without complex ownership changes. This partnership-first model provided several advantages. HeartFlow maintained a lean operational structure, avoided the integration risks associated with acquisitions, and gained rapid access to key markets. Resources stayed concentrated on refining and advancing diagnostic capabilities rather than managing the complexities of large-scale corporate mergers. By 2024, this network of collaborations included hospitals, imaging centers, academic researchers, and health policymakers, working together to make HeartFlow's platform accessible to thousands of physicians and millions of patients worldwide. These alliances became a central proof point for the company's business model, especially as anticipation grew around a potential IPO. In contrast, many large medtech firms have relied heavily on acquisitions to expand market presence. While such strategies can quickly add scale, they often bring operational challenges, cultural clashes, and diluted focus. HeartFlow's choice to grow through strategic partnerships allowed it to sidestep these issues while building trust among clinicians and health systems. The result is a company whose market presence has been achieved through credibility, evidence, and collaboration. For healthcare providers, HeartFlow's tools are not experimental. They are peer-validated, integrated into daily practice, and supported by clinical outcomes. For investors, the model demonstrates disciplined growth, efficient capital use, and scalability without the overhead of large corporate integrations. HeartFlow's steady approach has positioned it as one of the most closely watched companies in the medtech sector, with partnerships forming the backbone of both its clinical impact and its business momentum. HeartFlow's revenue trajectory reflects robust demand for its AI-powered cardiovascular diagnostic platform. In the first quarter of 2025, HeartFlow reported revenues of $37.2 million, marking a 39% increase year-over-year. This momentum follows a strong 2024, where annual revenues surged 44% to $125.8 million. These gains are fueled by expanding adoption of HeartFlow's core offerings, HTFL analysis and AIQ-CPA. The cardiac imaging market, valued at over $12 billion globally and expected to grow at a 6.5 to 8% compound annual growth rate through 2030, provides a fertile backdrop. The scalability of HeartFlow's per-case business model, charging for each diagnostic study analyzed, creates a high-margin, recurring revenue stream with minimal incremental costs. Margin expansion is supported by operational efficiencies and growing volume at established imaging centers. Partnerships with major health systems in Germany, Canada, and South Korea underscore the company's increasing global footprint and clinical acceptance. Despite these strong fundamentals, key uncertainties temper investor enthusiasm. From pioneering the first FDA-cleared CTFFR platform to developing the advanced AIQ-CPA tool, the company has redefined how heart disease is detected and managed, shifting the paradigm from invasive procedures to non-invasive, AI-driven precision medicine. Looking ahead, the company's future appears promising, but demands careful navigation of regulatory, reimbursement, and competitive challenges. As AI continues to reshape healthcare, HeartFlow's proven platform positions it well to capture increasing market share, expand into new geographies, and drive a shift toward predictive, preventive cardiac care. With the IPO on August 8, 2025 reaching above a 50% gain, HeartFlow is poised not merely to enter public markets, but to lead a broader transformation in heart health. For investors seeking exposure to innovation at the forefront of medtech and AI-driven diagnostics, HeartFlow offers a rare blend of validated clinical impact, scalable growth, and strategic discipline, making it a company to watch closely in the years ahead. If you like this video, stay with me and click that subscribe button. Comment down below any other asset types you would love us to dig deep in. I appreciate all the love.